Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Of course, a lot of readers keep writing to me on KYC to get in newly listed companies as well. Of course, the track record is on the lower side, but nevertheless, we get you these companies. But I'll give you some hints. Before you can guess the company, let's put out the hints. The Media Solutions SaaS company, software as a service company. Of course, recently SaaS companies have taken a derating after AI has come. But will this company actually come up with something surprising? That's something to look out for. The second hint is it was listed just last month itself, January 21st. You could say just more than 1 month now from 2026. It's a very recently listed company and we'll go into more details about it. The third important hint is the stock is still in a really bad market or a volatile market. It's up 19% from listing price. That is really strong as well. So these are the key hints I'd like to focus on. But remember, General Atlantic, Premji investment, this is of course the private family office of Azim Premji, and you see a very strong backing coming for this company. Very interesting. Also, a couple of more hints is a lot of live events which you have been seeing. The company has been, at the back end of it, be it Grammys, NFL, and a lot of sporting events as well. We'll get to that. But the company in focus is Amagi Media Labs. That's what we are talking about here. And it's just been 1.5 months since it's listed. So we need to delve deep into the company, what it actually does, and is the street actually giving the valuation which the company deserves or not. But why are we calling this company? Let's ask the important questions. The first one is, of course, AI. Is it a friend or a foe when it comes to infra SaaS? We have seen what has happened to the SaaS companies, but is the company having a moat? Has the company been discovered by Dalal Street that it is a bit different than others? That's what we will ask the company. The Q3 adjusted EBITDA margin, that was 14.3%. Will this sustain going ahead? How does the margin profile work of a media SaaS company? We'll ask all these questions to the management. The capex plans for AI investments. What's the strategy ahead? Management was bullish in their Q3 con call as well. So will they walk the talk or not? And if yes, what will be the amount for the capex investments? Kharch kitna hoga AI mein? Let's talk about the other important factor, and that's the media entertainment ecosystem. What are the key growth triggers looking like? Everyone is also migrating from the cable to the digital space as well, and this company is playing a very very pivotal role actually in this segment as well. So it will be very interesting to catch about this and the demand trends and the client confidence, especially in the non-US market side, because US side concentration of revenue is definitely on the stronger side. But how does the company expand in the European markets, in the Asia Pacific markets? All these questions will be answered in KYC, so stay tuned for that. And the AI usage, any kind of incremental benefits which are coming in, and if yes, can it be quantified? Interestingly, the management has also spoken about that fixed cost component. That's almost 2/3 of the total cost. That means revenue has a better upside potential. And of course, the new product categories, because they are concentrated totally in this, media and education entertainment. And to give us all the details on the show, we'll have Baskar Subramanian. He's the co-founder and the MD and the CEO of the company, where he'll give us all the details about the company. But when we talk about the company, karta kya hai company? Kya karega aage? These are the questions which comes to your mind. So I'll try to give you all these details one by one. Listen in slowly. It's a media solutions company. It was founded in 2008. Listing, of course, was very recent, and this was listed on January 21st, 2026. But there are a lot of other details about it. Now they have launched, managed, distribute, and monetize a lot of contents. And then it goes on to the on-demand content creation. There's, of course, you could say this happens in cable, OTT, and the fast platforms. This is where the future lies when it comes to the streaming. That's what the company is holding, all in all, entire pipeline of products here. They're catering to content providers, distribution folks, and the advertising platforms and advertisers as well. So you could say there is a flywheel kind of getting developed, but majority of the revenue is still coming from distribution and playout services, and the monetization, or you could say the sales ad revenue, that has started to pick up as well. They have served over 400 content providers and over 35 distributors, and the presence, of course, you could talk about it, is across 40 odd countries, serving almost 75 advertisers. They have also maintained that almost you could say 80 to 90% of the listed largest players in this segment also are their clients. Also, let's see the geographical revenue breakup. Almost 73% comes from American region, especially US markets. So that'll be very much interesting to understand more that what's the company's, European and the Asia Pacific and even India's expansion plans. However, India is just 1.5 or 2% from the total revenue. Also, the key clients, these are the biggest names in the media space. We have Vivo, Lionsgate Studios, DAZN, E.W. Scripts, Sinclair Broadcast Group, and even Vizo and Roku make it to the list. These are the large players in the media who will be using this. Remember, this company is into B2B, just to keep that in perspective. Recent works, I'm sure you must have seen at least the break of NFL Super Bowl. That's what, they have done recently. It's very interesting, these important events which are coming in, and the company is at the background of it. Grammy, 2025 Grammy was also done. And this Amagi Media Labs was behind this, and 2026 Winter Olympics also coming in. So very interesting company, but behind the scenes, it's a B2B play. So it'll be very much interesting to understand कि screen के आगे क्या है, and that is why we are getting the management. Almost a global industry trend is a $498 billion global broadcast and streaming market. So barely the surface has been scratched, and $3 trillion of the total numbers to look at, out of which Amagi wants a small pie. 10% media corporation, is there, where these operations are on the cloud, and this is where Amagi Media Labs is currently focusing on. And the important thing is the shift from cable to OTT. I'm sure you must be seeing this video in the live television, but later on you see it online as well, and that's also very much important. So definitely look out the socials at NDTV Profit. But there are a lot of questions also. Has the market understood this company after it's getting listed? Infra SaaS in media. Is there a moat in this business model? How different it is with its peers? Because locally there are no peers for this company. Total addressable market is $16.9 billion. So what's the global market share for the company looking like? That's the key question we'll be asking. The third question, very much important, is what's the threat coming in from the larger players or a rising competition? Is there an AI update which can spoil the business model of this company? Who knows? SaaS players have been impacted. That's a big question to be asked. And of course, after IPO, they have money in the bank. Are they looking for further acquisition plans? Because of course, media industry has seen a lot of consolidation, and this also applies to the B2B players as well. So very interesting company, interesting questions, and the company itself is in the middle of migration. Their entire business model comes in is from traditional to, I could say, the modern, or you could say the streaming segment of it. But to understand more, you need to understand our show also. And to understand our show, you need to understand the rating parameters. The holy grail, 3 numbers, financials, no changes. But I have changed a little bit of ratings for this company, and that is what's important. Operational parameters I have taken instead of the return ratios, because the model is such, you need more time in this to actually get the average return ratios in. So operational parameters are very much important for this company. Also, let's pull out the other rating parameters. Remember, shareholding street cred is just 1 month of entire data coming in. So इसमें आपको ज़्यादा data नहीं मिलेगा. Of course, from IPO pricing, we'll see how much the movement has happened. Peer analysis is also very interesting this time I've got for you. And this time, there aren't any Indian peers, and the global peers, if you talk about it, they are not, you could say, apple to apple. Some of them are coming in one portion of a pipeline, but the company itself claims that it is having the entire product pipeline. That's what we'll ask the company. And of course, the outlook, industry and company, kya hota hai aage? This is the most important thing which you should be tracking. But let's look at the first rating parameter, and that's the income statement. How things have moved out. Revenue, look at it, this has been growing up, 681, 879, 1163 crores. And interestingly, I would like to point about these contracts which are there for the large client. It looks like a perpetual contract because they are still undergoing bigger changes. So this company does enjoy a moat, at least for the traditional players itself. EBITDA also, remember from FY22, the EBITDA has been, coming down as such. Of course, that path to profitability, that's the question which is there, which we ask a lot. And in the Q3 numbers, we can definitely see that the company has turned profitable. But of course, we should judge the company not just on a quarterly basis, but on a fiscal year basis also. Likely FY26, it will turn profitable. And that is where we'll start getting in more coverage on these stocks, be it the analyst community and even from the HNI segment. Q3 numbers, let's look at it, how things have panned out. Company has seen a turnaround quarter. You know, घाटे से मुनाफे में, that's the word which we call in Hindi. This is very much important. Revenue decent, 22-25%. That's what company has been talking about. But profitability, that is what is very much important, and those numbers have come in. But let's give in some more time for it. This is just one quarter of it. So net, it's a neutral rating when it comes to income statement. Balance sheet for a company like this, it's an asset-light model company. Debt आपको दिखेगा नहीं. Largely, it's a very decent setup. Nothing much there. Remember, the company is coming just from its IPO, so a little bit of ESOP expense and IPO expense is also there. But largely, the cash numbers are still decent. 490 to 500 crore plus cash is something which we are seeing. That means, and the company is using or may use going ahead in acquisitions as well. Nothing major buyback or dividend announcement has come in. अभी तो सिर्फ IPO ही आया है, it's just been a month, so we need to give it more time. But net, the balance sheet is strong, so I'll give a thumbs up for it. Let's talk about cash flows, and that is where some kind of question marks you will see definitely happening, especially you know, because of the IPO expenses, and the last 6 odd months they have taken a one-time ESOP expense hit as well, and because of that there is a pain, you know, when it comes to the net cash flows as well, some kind of lumpiness also coming in. So as long as we don't see, you know, you could say a normalized operational cash flow coming in, it becomes very difficult for us to understand. And to be fair, we need to judge the company by the numbers also. And that is why I have given a negative rating for cash flow segment. But to make, you know, and to give it a very balanced approach, I have not taken ROC and ROC, I have taken the operational numbers because these numbers are very strong. Cumulative hours were jumped up almost 64% on a year-on-year basis. So you can understand content creation कितना हो रहा है, कितने TikTok बन रहे हैं, कितने reel बन रहे हैं, कितने shows आ रहे हैं. You can see how important this has become. The second thing is, of course, the content deliveries. I was talking about that. It's up 37%. On a year-on-year basis. And another operational metric I'd like to point out that's doing really well is the distributor's reach. Of course, distribution is the king if you have a content. So, and remember, 31% year-on-year basis reach is increasing, and these numbers are looking big as well. The monetized impressions at the end, everybody wants that. Look at that, it's up 60%. So when you see these operational parameters, you understand it takes time for a company to come for path to profitability. And if you're a traditional investor, you're getting angry, Sharad, why there's no ROC, ROE? This is the reason for that. Now, let's talk about the shareholding, you know, how things are moving. And remember, it's just one quarter of, you know, definition is there, which is there here. But there is a little bit of concern for me. There's a promoter holding for this type of business model because it is largely family office, PVC funded. So that's why you're seeing FI is at 43%, DI is at 32%. And there are certain limits also. So promoter, it's very low here. So that means no major control coming in from the promoter definition. But definitely it's still held by a professional team. And largely, let's give it more time to see whether any kind of movement happens amongst the institutions. And as of now, let's keep it at neutral rating. Also, let's talk about the street cred, you know, how things are moving. We spoke about the shareholding, but street cred will give you a little bit of jhalak, and that jhalak is just till the IPO. Yaad rakhiye, the date is this, January 21st, 2026. But even in this bad market, in the month of February, we saw so much volatility happening. March also is volatile to the market. From the IPO price, it's still in the green. It's up 5%. On the other hand, there was a dip on the listing, and still from there it's up 19%. So market is definitely rewarding this you know, company, and this is the time where SaaS companies globally took a very big beating, but ye SaaS company gira nahi. So it's a strong street cred when it comes to this company, Amagi Media Labs. But peer analysis is very interesting analysis I have taken. There are no Indian peers, and the global peers also, not everybody has the product stack which the company has. It's the largest full stack cloud native solution against the peers. That's what the company claims, and I saw the RHP and I can confirm, yes, it is. It's a niche media global SaaS infra software. There's an average to it. If you could just show the average of these ratios, this actually goes in for 25 to 40 times in the EV basis. On the price to earnings basis is roughly 16 times. This is the average from the Bloomberg I have taken. This is the infra SaaS at play, but the company, if it enjoys the moat, and it is currently at least seeing from the IPO itself, and that is where it seems like it is enjoying a valuations premium, and there are no Indian peers, remember, and the global peers also, it seems like company is actually at a good advantage in terms of size and the product stack. So net peer analysis, to be fair, I've given a strong thumbs up when it comes to Amagi Media Labs. But of course, let's talk about the outlook, how things are panning out. This is the most important thing, is the cloud modernization. This is something which has been playing out for the last decade. It's expected to go in a couple of more decades as well. Also, is the streaming unification and the monetization marketplace. This is where the entire business model is set. Ye core hai. If you are studying this company as an analyst, there's a strong AI stack. That's what I have seen there in the con call, and they might command a premium in SaaS market. This is the reason why I've given a thumbs up when it comes to the peer analysis. And look at the amount, $3 trillion in global media entertainment market. So the sky is the limit, and there aren't any peers to actually compare. So it becomes quite easy to actually find this company in this niche, and that's why maybe it's commanding a premium if you compare with other SaaS players which are listed in the Indian market. This is the bullishness coming on the new video economy, the entire show, a lot of shows you see from the mobile screen as well, in the YouTubes at NDTV Profit, and you see this is the future. AI may disrupt infra SaaS models, and each time Anthropic or Claude comes up with a plugin, we see SaaS bleeding. Will that happen to the company? That's also one question mark, and of course, that's the threat coming in. And the company has a moat against peers for all-in-one solutions. That's what they talk about it. And definitely there is a flywheel also. So one thing leads to the other, and all of them benefit. And that's why I think the margins are also getting lifted as well. So net for outlook, it's a strong outlook and a thumbs up coming in. But this, of course, AI and competition fears are always there. So always take things with a pinch of salt. But let's give you the entire rating, how things have panned out, and slowly I'll make you understand the path to profitability is definitely there in the company, but let's give it more time. Balance sheet is strong, it's asset light, and you never know, the cash might be used for acquisitions. Cash flow, company needs to show. Of course, there's a lumpiness from the IPO and ESOP. Operational parameters are bang on. That's what the markets are looking at. It's actually giving that premium. Shareholding, we need to wait some time out. Remember, FIs, DIs hold almost 70+% of stake in the company. Street trade from the IPO, it has done well. It's commanding a premium against the global peers, and the outlook, that is where the strength also lies, and that is why the final rating on the higher side for Amagi Media Labs is 6 out of 8 for KYC. But I'm sure there are a lot of questions also which you need to ask, and that is why we'll be joined in by the co-founder, managing director and CEO of Amagi, Baskar Subramanian, and of course he has started his career as a software engineer in Texas Instruments. Okay, there's another AI angle to it. And also co-founded ImpulseSoft. Already that was acquired by a NASDAQ listed company, Surf. And interestingly, Baskar is a good cycling enthusiast as well. So pretty much a very interesting profile for Baskar. But good afternoon, Baskar. Always a pleasure to have you on our show. And AI is something in Amagi also. I can see there is A and I. At the first is A, at the end is I. So now how it changes, because SaaS, for a normal layman person at times gets impacted by AI. So I just want to get this, through this view in, the AI stack, how Amagi is using it, and if yes, is there any threat from the larger players like Claude or Anthropic, or is it something else which you're having a moat?
Thank you very much for having me on the show. I think AI is top of mind for all of us, and we're extremely bullish at Amagi of what the AI transformation can do for the media business. I think we're pretty much leading this whole trend line with lots of investment we're making as a company. Having said that, the delineation of SaaS, and I want to kind of give this as a understanding, important understanding, is when we talk about SaaS, largely the market's talking about horizontal SaaS. There is companies which are building tools and utility software which people are using it for their productivity gains inside large companies. At Amagi, and like everything else, because we're a vertical software company, what do we mean by that is we are pretty much the heart of our customers' operations. We run their operations pretty much for them. So to that extent, it's a very, very deeply integrated technology platform for our customers. And this is not something you can vibe code yourself through the process. And because of it's also end-to-end capabilities. The big opportunity for us as a company that we see is if you look at the media business historically, for every dollar of technology spent, there was at least $4 of human cost spent for you to operate these platforms because video and audio and latencies and sports and news are very hard problems to solve. What we see with AI is a genuine opportunity to change the game by actually bringing in autonomous agentic infrastructure on top of the platforms that we built. And that's the huge opportunity that we're really going after today. So we are really, really bullish on AI.
Right. And Baskar, apart from that, AI investments, I see you have cash on the books as well. And of course, IPO is done now. You are a listed player. AI investment plans, have you, earmarked anything for 2026?
We have already been investing, and if you look at it, again, we don't capitalize any of our software. So in spite of the EBITDA that you see, we are continuing to invest heavily, and a lot of our investments are today going into AI investments as a company that we move forward, right? So we are very comfortable with the investments we're making. In addition to the street guidance and expectations we're providing, we're kind of managing both together right now. So we're extremely positive about the overall AI change and we're comfortable with the investments we're making as of today.
The adjusted EBITDA margins, I looked up, it's 14.3%. And in the con call, it was stated that 2/3 of your costs are actually fixed. That means there is a big upside potential for the revenue as well. So could you give me some margin or margin guidance and even the revenue guidance, any kind of ballpark figure for both of these elements? Even if it's adjusted, it's fine.
No, I may not be able to give you exact numbers from a call standpoint, given its future looking to some extent. But what you're seeing is a clear path and a track record that you would see. And again, not just one quarter, but if you look at it in the last 3 years and what we kind of announced and what we've seen, you will see the operating leverage playing out. And that's just the nature of the business. It's nothing to do with the Amagi per se. The nature of the business lends itself to a fixed cost structure which can actually be able to repeatably provide more and more productivity gains. And that's the reason if you look at it, the cost, our indirect cost as a percentage of revenue continues to come down, and that flows through to the EBITDA directly for you. And that's going to be the future as well. And we don't see any major surprises or challenges on that directional front.
And interestingly, a lot of business cases come in is that traditional media networks are there and they move on to the streaming. How is this process like? Just to give in a business flow, in short, if you could just explain us, because there is an advertising flywheel element as well. So if you could just give us that entire flow and how does the company have a moat against peers? Could you just explain it to our viewers?
Okay. If you look at it, our customers are anybody who creates content. So content creators, starting from the largest TV channels or OTT operators, to people who are coming out of YouTube and wanting to create their own content and build a media company for themselves. So that's the spread of people that we work with today. And you see on the screen, we take it a DAZN or a Vizio or a Roku, all are large media companies today that are actually trying to really build things. What Amagi does first is what we call as a modernization journey. If you're a traditional TV network and wanting to be in the streaming world, we enable these companies to change all their media operations to cloud first. Essentially, today, they run on a lot of hardware, satellites, OB-vans. You've seen all of this from a television standpoint. We think this infrastructure will go away, and all of this will become software running on the cloud. That's the first part of the journey for any traditional media player. Once you do that, you want to be really building a streaming platform for yourself and also distribute content through streaming and OTT operations for everybody in the world. So we enable our customers to take their content globally, what we call as omni-channel distribution. Exactly like retail, we enable these people to take their content across the globe and sell it to every distributor that's available. That's the second part of the stuff that we do for them. Once they do that, they would like to monetize that through advertising our subscription and get the money back and the analytics of what's happening on the field. We provide them a capability to do that. If you look at it, this is the flywheel for them.
Right. Yeah. And that's a very interesting take, Baskar. But the last question, a very short one. Somebody who's young in the 20s right now, playing around with AI agentics, and he wants to make it big in media and education industry, is tracking your business model as well. What's your view for that person?
I'm always paranoid of every new innovation that comes up, right? Two things which can allow us our own ability and agility to innovate, number one. Number two, if you look at it, this business is a very mission critical business. Our customers need longevity and reliability as a very important metric. And in fact, Amagi going public is a big vote of confidence for our customers to bet on companies which are much more both innovative and long-term looking and have a long gestation in terms of survivability and growth. Super important for our customers. So I'm not really worried about the 24-year-old yet in this
Okay,
business.
so you're not worried about that 24-year-old guy tinkering with the AI agent and trying to analyze the traditional and the modern media as well as you being in the middle. Thank you very much, Baskar, for this very interesting interview regarding the company and the industry. And that's a pretty interesting take coming in from Amagi Media's spokesperson, the way the traditional media is moving towards the streaming space. And maybe you're watching this on the YouTube video as well. The company has done well. The KYC rating, we have given 6 out of 8. That's all, folks, for KYC. Stay tuned to NDTV Profit.